Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena, and with me is Vinny Motiwala. This is the show where we take you through all the stocks that are in focus today on the back of research and on the back of technicals. But first up, let's take stock of where the market is at. Vinny, smart recovery coming in for the markets after yesterday's carnage that we saw on the markets. In fact, holding on to decent gains. In fact, the broader markets are the ones that are really, holding ground in today's trading session.
Absolutely, they were holding on to some ground. Though, yes, we are off the day's highest point. Actually, we're trading near the day's lowest point right now, around that mark. 0.4% of gain is what we are holding on to right now. Down almost, percent from the day's highest point. At one point of time, surely we were trading at 24,381. Now we are 24,160 levels. So keeping an eye on that. That's the Nifty what we're looking at. Now let's pull up what the broader markets are doing. So Nifty mid cap as well as the small cap. Nifty mid cap is holding on to gains of almost 1%, while the small cap also managing to hold on to gains of 1.2%. So yes, we're seeing a bit more traction that is coming in the mid and small cap, but that had seen a sharper cut coming in yesterday as well. And whenever the mid cap and small cap falls, that's seeing a sharper fall versus the benchmark indices. So recovery is also a slight bit better than the benchmark indices. FMCG continues to see an up move today. What we're seeing, 0.8% of uptick. So that's the defensive side that is keeping into play, as well as the Nifty Media, which is managing to hold on to gains of almost 1%. But in the last 1 hour, some of these names that one should mark out is, let's pull up Lemon Trees. That's seen a fall in the last 1 hour as well. We have Policy Bazaar, Gujarat Ambuja, Zomato today, as well as Finolex Industries among some of these losers which have been falling in trade. And specifically in the last 1 hour, we've seen a bit more of a decline that's coming for these stocks. So yes, keeping an eye on all these names today. Other than that, we will talk about a whole host of other stocks that are buzzing in trade on the back of news flows and technicals as well in the next 1 hour.
Absolutely. So let's get started with that. We have Osho Krishan, Senior Analyst, Technical and Derivative Research from Angel One, joining us on the technical front. And from our research team, Snehi Shah is joining us. Hi, welcome both of you to Market Fatafat. Then without further ado, let's get started with all the stocks that are in focus. BLS International, this stock is soaring away in trade. In fact, the stock was trading with gains of almost 10% in trade today, and this is after it reported its Q1 results. The company has gained a lot of traction since then. A strong start to the year and delivered a strong, robust performance with consolidated revenue and EBITDA growth of 28.5% and 66% on a year-on-year basis, respectively. And the increase was driven by the visa and the consular business, which witnessed a revenue growth of 35.9% on a year-on-year basis and an EBITDA growth of 70% on a year-on-year basis. Well, the company's focused approach to increasing market share globally, coupled with strong industry tailwinds, have contributed to the segment's growth. And if you look at the company, what the company management had to say, Shikhar Agarwal, who's the joint managing director of BLS International, said that their ongoing efforts to make their visa business operations more efficient and transitioning from partner-run to self-managed centers at various locations has really helped them achieve those EBITDA margin levels. Also, another piece of news coming is that they have approved a proposal of raising funds of up to 2,000 crore rupees by way of QIP, and that is what is powering the stock in trade. It is trading with gains of more than 11.5% right now.
Okay, surely keeping an eye out on that. But Osho, good afternoon. And the first stop that you've picked out for us today is coming in from the pharma side, Alkem Labs. Today holding on to gains of almost 1%. Last 6 months, it's been flip-floppy, not much of a return. What's the word now on Alkem Labs?
Very good afternoon to all of you. Well, looking at the first counter of Alkem Labs, because I'm witnessing the market is showcasing some kind of resilience in the pharmaceutical companies and healthcare. So Alkem is sustaining at the higher levels above all the exponential moving average on the daily time frame. And also on the technical front, I'm witnessing a formation of symmetrical triangle in Alkem Laboratories. So I'm expecting that the time it breaches the zone of 54.20 odd levels on the spot, then from here onwards we can see a very decisive upsurge in this counter. So this counter should definitely be on the track for a higher target of nearly 56,000-57,000 for short-term perspective.
Okay, surely keeping an eye out on that one. Let's move on. Schneider Electric, that's the one we're watching out for today. At one point of time, the stock was holding on to very good gains. Right now, it's a bit muted in trade, but was up more than 1%. And this was, still holding on to 7.85% gains. That's Schneider Electric, was up almost 10% at one point of time. Robust set of numbers that came in Q1 FY25 for the company, where we saw that they reported a 39% rise in terms of the profits of the company. Revenue saw a growth of almost 20%, while in terms of the operational performance also quite strong. So when you're looking at it, the EBITDA, that saw a growth of almost 66%, while margins also an improvement of around 380 basis point on a year-on-year basis. EBITDA margins coming in at 13.8% versus just 10% last year. So strong performance overall, that is leading to a good up move in the stock. The EBIT improvement was mainly due to product mix, ordering, pricing, as well as operational efficiency is what is supporting the growth of the company, and they're experiencing good momentum in terms of orders across all their segments, with its order backlog just at 1,294 crores. So yes, keeping an eye out on Schneider Electric today, holding on to gains of almost 8% as of now.
All right, Osho, you have picked out Astral for us. This particular stock, last 1 month is seeing consolidation. It's in a consolidation mode for the last 1 month. Tell us, do you see the stock picking up steam from here on?
See, Astral has given a very strong movement in the recent period, and looking at the 2-month formation, there has been some kind of profit booking from the higher zone of approximately 2,500 levels. But the positive development is the counter came towards the zone of 200-day SMA, and also the technical parameters which we are near about the overbought zone. Now they have came to the oversold territory. So I'm expecting that from here onwards, there can a decent upsurge or a trend reversal that can be seen in this counter, because cyclically it is on a verge of making higher highs, higher lows. So I'm expecting that this is a very strong support zone near about 2000, 2050 odd levels, and from here onwards we can expect a decent move in the coming period.
Okay, surely keeping an eye out on those levels over there. But let's move on to the next stock in focus. And yes, we were doing a tug of war, Snehi, for this stock that we were watching out for, because it saw a sharp jump up just half an hour ago, I think, and that is Symphony. Take us through everything that's happening here.
Well, absolutely, Vinny. Fastest fingers first, right, for the best stock of the day. And look at the moves coming in on Symphony as of now. No wonder Vinny and I really wanted to talk about this stock. 20% uptick coming in just on an intraday basis. In fact, like Vinny mentioned, just in the last half hour itself. Look at that spike. Now, two reasons for the spike coming in. First reason is the Q1 numbers that the company has just reported. Stellar set of numbers coming in. Revenue has come in at 531 crores versus 302 crores this time last year, which is up almost 76%. EBITDA has also come in at 111 crores versus 25 crore rupees, which is up almost 4.5 times year on year. Net profit has come in at 88 crores versus 24 crores, which is up to 66.7% year on year. EBITDA margins also, what a brilliant expansion on this front as well. 21% thereabouts versus just 8.3% last year. Now, the second reason for this a spike coming in the stock is the announcement of a buyback. There is a proposal for a buyback of up to 2.85 lakh shares, representing up to 0.5% stake, roughly 0.4% stake, and the total buyback is for a consideration of 71.4 crores at a price of 2,500 rupees per share as of now at 1474. So that difference in the current market price and the buyback, also a very big difference coming over there. Street reacting very positively to both of these announcements.
Right, absolutely. And just an update in terms of the stock price. It's at a 3-year intraday high is what it managed to touch. So yes, surely keeping an eye out on that one today.
All right, Osho, coming to you then. Sera is the name that you have picked out for us. This counter in the last one, in fact, beginning August, it has started showing some movement. It has gained like 9%. Tell us, where do you see this stock going from here on?
See, overall, this is a cash counter, but it has given a very strong breakout from the zone of 9,400 odd level. So I'm expecting that from here onwards, with the kind of formation, it has made a flat pennant pattern breakout in the recent period. So I'm expecting that from here onwards, we can witness a very strong upsurge in this counter. Theoretically, the target is approximately 2,000 points from here onwards, but on a conservative approach, I'm expecting a near about target of 10,300 on immediate basis. So that is the immediate target that one can eye for short-term perspective. But looking at the trend and the momentum, I expect a very strong movement coming in this counter from medium-term time frame.
Let's keep an eye out on Sera's and freeway levels over there. Let's move on and talk about those stocks that are in focus today, especially the textile names. This is mainly because obviously what's happening in Bangladesh. We're seeing a lot of these textile names that are buzzing in trade. Now, let's pull up something like a Vardhaman Textile. We have Arvind, we have Nahar Spinning, KPR Mills, Trident, all of them buzzing in trade. Now, what happens is, because this does start benefiting India in terms of the textile industry, maybe we could get in some of the orders that are there in Bangladesh. So this turns out to be a positive impact. These yarn exporter, textile exporters specifically get impacted by all of this. Now, we also have some of these FMCG names that are in focus because of what's happening in Bangladesh. And if you have any exports over there or any business over there, those stocks have seen an impact. But for textile companies, even jute stocks, all of them are buzzing in trade today because of the turmoil there. It becomes a positive for the businesses in India, and they will start getting a bit more traction over there. So whatever works out well, and this is why Vardhaman Textile holding on to gains of 6%. We also had a Trident, which is holding on to gains of almost 5% as well. Listening to what the management of Vardhaman Textile also had to say. They didn't manage to speak to us in terms of what's happening currently in Bangladesh, overall the industry view, as well as the view for the company.
India. Now, fabric is being nominated by some of our brands, and garmenting is done in Bangladesh, which may therefore be somewhat temporarily affected in my view. When it comes to fabric and yarn, we have different percentages. In yarn, we are exporting roughly about 35-40% of our yarn production as exported yarn. And similarly is the fabric. Fabric may be somewhat less, but 30-35% being exported. Our primary export is Bangladesh. Of course, some exports go to even Latin America and some to Indonesia, but that is very limited because here our access is far nearer.
All right, that was the management of Vardhaman Textiles. But with that, it's time for us to take a quick breather. Don't go anywhere after the break. We're getting you lots more stocks. Welcome back. You're watching Market Fatafat on ET. Now, quickly, I will want to mark the market because the Nifty is moved into the red. Bank Nifty in the red. Sensex also just slipped into the red. So, we're seeing a sharper fall that's come into the markets. More than 1% of decline from the day's highest point. Actually, 1.22% decline from the day's highest point is what we are seeing. The Nifty coming in and not managing to sustain on that positive side. What we saw coming in, while global markets also we had seen them see a decline. But Nifty 2 is down right now in trade, almost flattish. Mid and small cap still sustaining those gains, but they were up 1%. So now they're down by 0.5% from the day's highest point. Small cap also just 0.6% of gain now. Nifty Bank, let's pull that up. That's down 0.5% in trade right now. And what we're seeing in terms of a fall that's coming in just the last few minutes, I would like to refresh some of the names that we're talking about as well. Let's pull up Vardhaman Textile. That's down 3% now from the day's highest point. We just spoke about it. We have Hudco that has also given up those gains as well from the day's highest point. So we are seeing a fall that has come in for the markets as well. Top losers right now, Marico, Sirma SGS, Cochin Shipyard, GRSE, these are the names that are surely seeing a sharper decline. While on the Nifty 50, we have HDFC Life, pull that up, that's seeing a sharper fall as well. 2.5% decline for HDFC Life, Bharti Airtel, SBI Life, HDFC Bank among the top names that are seeing a bit of a fall. But that's how the market is looking like, just slipped into the red right now. We'll wait out for the next couple of hours of trade, next 1.5 hours of trade and where that is headed. So keeping an eye on that. But let's move on to the next stock. And Osho, Gland Pharma, that's the one you've picked out for us. What's the expectation in terms of a target that one is watching out for?
See, overall, again, from the pharmaceutical company, I'm expecting that there can be some kind of outperformance that can be seen. But also on the technical front, it is on the verge of giving a breakout. Near about 2100 is a very strong resilience zone. And the time it gives a decisive or sustainable breakout above 2100, then we can witness another rally of 250 to 300 odd points in this counter. So definitely one should keep this in their watch list. For short-term perspective, near about 2300, 2400 should be the target that one can eye for. But from here onwards also, the trend has been turned on the bullish side. So any dip towards the zone of 2050 or 2020 should be seen as a accumulating zone with immediate target of 2400.
Right, that was Gland Pharma. But moving on to another earnings candidate then, Deepak Nitrite that reported its quarter one results. In fact, the stock was trading with gains of over 4% in the early morning trade. Right now also it's up almost 3.5%. Now let's look at the numbers then. The profit for the company rose for the first quarter of the current fiscal. The company's consolidated net profit came in was up 35% on a year-on-year basis to 203 crores in the quarter. Now the net profit came following the top line growth of 23% on an annualized basis during the quarter. Now Deepak Nitrite's revenue for the quarter stood at 2,167 crores, compared to 1,760 crores in the corresponding period in the previous fiscal financial year. Now the specialty chemical, the company's operating profit also rose 47% on a year-on-year basis to 309 crores for quarter one to 210 crores. Now the operating profit margin also rose 240 basis points to 14% from 11% earlier on the back of some good set of numbers posted by Deepak Nitrite. The stock is up in a way, trading with gains of over 3%.
Okay, surely keeping an eye out on Deepak Nitrite over there. Let's move on to the next stock then, and Gokaldas Exports. So, Osho, that's the one you've picked out for us. What's the target that you're keeping for this one?
See, for Gokaldas, I am expecting, because there has been a very drastic upsurge in this counter, which has been backed by very strong volumes. But tomorrow, I guess there is a result pending for this counter. So I'm expecting that if there will be a follow-up buying from here onwards, then definitely this counter can eye for the zone of 1300 to 1350 on immediate basis, because on the technical front we have witnessed a very strong breakout around the zone of 1000. So even if any dip comes towards the zone of 1000, that should be acting as a very strong support, and one should try to, aggressive traders should only try to accumulate this counter for a higher target of 1300 to 1350.
Alright, moving on. Snehi, Cupid has struck hard. It's locked in the upper circuit. Tell us, it's an earnings candidate. Tell us what is the result looking like?
Well, absolutely. So upper circuit coming in for Cupid, 5% upper circuit is where the stock is locked in at, and very good set of numbers coming in. You had revenue that came in at 39 crores versus 34 crores, which was up 16.2% year over year. Net profit also very sharp expansion coming on this front at 8.25 crores versus 2.15 crores, which is up almost, in fact, it is up 4% on a year-on-year basis. EBITDA has also come in at 6.6 crores versus 1.8 crores. Big uptick coming in on this front as well. And margins are the key factor to watch out for, because very sharp expansion coming in on this front. 17% is where the EBITDA margin is at for quarter one versus just 5.4% on a year-on-year basis. Now, Cupid has also approved the incorporation of a wholly owned subsidiary in Dubai to expand its business opportunities, and the name of the proposed name of the company is Cupid UAE Limited, or Cupid Investco Limited, or Cupid Investments Limited. We'll get more details on this later. But well, yes, a good set of numbers coming in, and also they're trying to incorporate a wholly owned subsidiary in Dubai. That's why the stock is locked up in upper circuit, 5% higher.
Okay, let's move on to the next stock. Greenply Industries, Osho, that's the one you picked out for us. Already moved up from around those 250 levels to currently at 370 levels in the last 6 months. What's the word now? Should we expect a further upside?
See, overall, this counter has been in a very strong trajectory, as you have mentioned. In the last 6 months, has seen a very strong up move. But 370 is a very crucial zone, because this was previously seen around the year of 2018. So it is on a verge of giving a breakout. It has not given a breakout yet, but I am expecting that with the kind of momentum and volume traction that has been following the overall momentum in this counter, any sustenance above the zone of 375 to 380 should provide a very strong breakout in this counter, and then post that only one should try to accumulate it for a higher target of nearly 440 to 45 from short-term perspective. But if it does not sustain above the zone of 380, better to stay sidelines and wait for some correction towards the zone of 320 to accumulate, and 380 should be the target zone.
Surely keeping an eye out on that one. Let's move on. Talk about Motherson Wiring off the day's highest point right now, trading a bit with a mild bit of a negative tick that we're seeing 0.3% of fall. Now, revenues of the company, they reported a decent growth there, 17% uptick there. Net profits saw growth of 21%. While operationally also we are managing to see an increase in terms of the EBITDA, 17% uptick there. Margins have remained largely flattish on a year-on-year basis. Now, what also happened, we managed to speak to the management, Mahendra Chhabra, the CFO at Motherson Wiring, in terms of what is he talking about the copper price cuts as well. What is it that one should expect from the company? Listening to what he had to say. Okay, I believe we'll connect that a bit later on. But yes, we'll keep an eye out on that one. They said that no impact on yen fluctuation on the margins, will pass on the copper price benefit to customers, and RM price benefit with 1 to 2 months lag is what they're talking about.
All right, Osho, coming to you then. You picked out a counter from the FMCG pack. HUL is what you've picked out for us. Tell us, what do you see on the charts for this one?
See, HUL has given a weekly breakout around the zone of 2650 and has been sustaining above it in the last 10 trading sessions. So I'm expecting that this is a very strong base setup that can be seen for HUL in the coming period. And from here onwards, there will be a gradual up move, not very aggressive with the targets, but there should be a gradual up move on the higher end. Immediately 3000 is the zone where I am expecting HUL to eye for. So approximately 2650 to 3000 is the immediate zone for HUL, with buy on declines and book profit around the zone of 3000.
Okay, that's the view coming in on HUL. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stocks after the break.